My name's Craig Earl, I'm Senior Market Analyst at Oanda, and today we're going to talk about Euro Sterling. Now, it's quite clear that Sterling is one of the bigger movers in the markets right now. The simple reason being that we do have a major political story unfolding here in the UK. We're fastly approaching Brexit Day, which is now around a month away. And while we are starting to see some form of developments here, we're more seeing developments by process of elimination rather than actual progress at this moment in time. And I think that's very much broadly in line with what Theresa May is planning. By eliminating all other options one at a time, then you're effectively left with the three on the table which she wants to have come the crucial vote in March. And that is Theresa May's deal that she's been negotiating with the EU over the last 2 years, no deal, and no Brexit. Now, the other two options scare half the House on each occasion, and therefore she is banking that her deal will get through by default. What we've seen now recently in the House of Commons is Theresa May delayed the vote on her deal because she said she hasn't fully agreed the terms with the EU in order to actually bring something back. And what that means is she had to offer another concession, which is in the middle of March she will propose a vote on the 12th, which will be on her deal which she actually brings back from the EU. On the 13th, if that's rejected, there'll be a vote on no deal. And then on 14th, there'll be a vote on whether to extend Article 50. So realistically, there's now actually a good chance that we could be getting towards that March 21st, 22nd summit of the European Council, and no deal has been agreed in Parliament, and we're down to that final week. Now, there's no guarantee that will happen. There's curveballs all the time when it comes to this Brexit process. It looks like it's strongly likely now to be an extension, even if it is just a technical extension to implement the various legislation. But the important thing from a market's perspective, and that's where the pound really does come into it, is there's still a huge level of uncertainty. And what we've seen over the past few weeks is sterling traders have been buying up the pound. And the reason is because no deals become less likely and because the opposition Labour Party has adopted a second referendum, which includes Remain on the paper as its opposition, as its main feature. Now, these things are very pound positive. The problem is, we've seen this a few years ago. The pound was buying into the actual referendum day back in June of 2016. And the markets were effectively caught well offside. So we saw that plunge in the pound when it started to become clear that the UK had voted to leave the European Union. What we're seeing now effectively is that there is potential for that to be happening again because the markets are getting ahead of themselves. And not only is the pound stronger right now, as you can see on that Euro Sterling chart, we've broken some multi-year highs against the euro. We've broken out of that range below that kind of 86, 87 level. We've been range bound now for quite some time between that kind of 86, 87 and 90, 91. In breaking below on the most recent news, we've really taken that leap into not necessarily the unknown, but we've taken that leap into territory that we've not entered into for quite some time. And I was personally of the belief that we may have to see more developments before we saw these levels reach. But in preempting this, which the market has a tendency to do, it means it's effectively vulnerable. But what it also means is we've entered into a new trading zone. So rather than 86, 87 be support, that's now a big resistance, potential resistance zone. In terms of what's below, I think 83, 84 historically has been a major area of support and resistance. So that's, for me, the kind of new trading range that we find ourselves in. Obviously, there's still a long way to go with Brexit, even if there is only technically a month left on the clock. But there's still a lot that can happen in that time, and there's still a few more surprises I think that could be on the way, a few more twists and turns potentially, and a lot more potential volatility to come. So while these technical supports and resistances are key, and I think that's particularly important to the downside, the levels of volatility that we can potentially attract over the next month could mean that we are swinging in and around those areas, potential for big swings of volatility, and if things take a turn for the worse, then I think the upside here could be quite significant.